Alrighty, guys, welcome to tonight's charting session. Hopefully, everybody is doing well. It is Sunday, October 15th. Hoping everybody had a good weekend, ready to get back to the charts, ready to get back to the market. So, tonight's schedule, we're going to be going over first what we're looking at, kind of where we are in the charts, what I'm expecting going into tomorrow. I will be trading tomorrow morning. We'll talk about my bias going into tomorrow, any specific setups. We'll take a look at a couple charts or anything that you guys want me to check out as well. And then any trades that you guys want me to check out, like anything last week. If you guys took any trades last week that you want me to review, let's go over those as well. And then any questions that you guys have further along the way too. Again, feel free to just ask whenever. So let's jump in, talk about what we're looking at. So zooming out on NQ, noticing kind of where we are in the charts here. Zooming out to the weekly, we are currently in this weekly imbalance and having a rejected candle off of this. Notice we have not broken through this. We have a big weekly bearish imbalance. If I take these things off here, you can see that we have a really nice down close candle that ended up coming. We've now filled this imbalance. We've rejected and now having the opening week here. I want to start to see this candle expand back to the downside, now rejecting this weekly imbalance. We have these equal lows set here. I still want to see lower at this point in time. Now, if we do run this fair value gap to the upside and we close above this weekly fair value gap, I would 100% expect the draw to be back to new highs. But now, at this point in time, now that we've closed in this imbalance, I would want to see us start to roll back over to the downside and come back to take these lows out. So going into this week, I want the draw on liquidity to be sell side, and I think we have a market maker sell model starting to form out here. So exactly what that is, looking out on the daily. Last week, we had a really nice price run, just, again, rebalancing. One thing I want to talk about today as well is recognizing what price does, right? Markets only move in three different ways. Number one is to have some sort of run on liquidity, right? Everybody, this is going to be a big note here if you want to jot this down or not. But price only runs on three things. There's only three reasons why markets move in what we're trading. Number one, to run some sort of liquidity, buy side or sell side. Number two, to rebalance to some sort of inefficiency, right? A fair value gap. Or number three, to rebalance to equilibrium. Those are the three things in what the markets are going to do. So when we see this market here on the daily, this rebalancing to the inefficiency of this imbalance right here on this fair value gap, the daily now has completed this market maker buy model. We have accumulation, the original daily consolidation here. Zooming out to the 4 hour, we've now expanded to the upside, rebalanced to this daily inefficiency. Now have, again, market structure shift to the downside, and now starting to form our market maker sell model. So now I am very, very bearish going into next week. I want the draw on liquidity to be these equal lows that we created on the last week, and I want this to now be the sell side of the curve that we're starting to see play out here. So what I am looking at going into tomorrow is I want to see this 4 hour fair value gap hold and flip to the downside. So we're currently now in the overnight session right now, reaching into this for fair value gap. Zooming in, I want to start to see this reject. We are sweeping New York session or Friday's high of what we're sweeping right now, which is this buy side level. We could look to reject this and start to sell back off, and then I would look to see a move back to this internal sell side level. If we continue to break up, I would look to see us come back into this 15-minute fair value gap, sweep this little high here, and then again continue to hold this 4 hour. So what we could do here is we could continue to run on this imbalance or continue to run this high, come up a little bit higher, sweep this level right here, and then come into this 15-minute, and then again continue to reject that bigger time frame 4 hour, right? Even though we can go fully and fill this entire gap, it doesn't matter. We could fully come all the way up here. It doesn't matter. We can still reject this fair value gap based off of that 4 hour candle close. So again, it all just depends on what happens in the overnight session. But what I'm waiting for now is just to see displacement. So I'm in an area where I want to start to see a rejection, right? This is exactly what we want to see on price. Again, what are we doing? We're rebalancing to this inefficiency. We have a 4 hour fair value gap. I want to see this reject. I want to see displacement to the downside on a smaller time frame, and I want to take the internal trade targeting this internal sell side level using that external draw, right? The best setups, the best trades, the highest probability is when we use this bigger time frame draw, right? The bigger time frame draw on the 4 hour is here, lower, right? We're in a market maker sell model. So when I zoom in, again, what am I looking for to take some sort of high quality trade? Rebalance to a bigger time frame inefficiency, right? So we're in a bearish 4 hour. And then what do I need? Either some sort of buy side level being swept, or some sort of, rejection off a bigger time frame, imbalance. We have a 15-minute here, whether it be this 15-minute here as well, right? That overlapping these biases with external versus internal biases and trades are going to give us the best opportunity in the highest probability setup. So I'm really, really liking where we are in the charts right now. I would like to see us either sweep this level, come up to sweep this high, or come up to this imbalance, and then look to see displacement. So right now, I'm exactly where markets want to be right now. I want to see us either start to have displacement down, and then that'll give me validation for shorts, or we'll continue up in the overnight session and then look to see displacement tomorrow morning. So depending on what happens in the overnight session, I'll be pretty bearish going into tomorrow. I think this is where we're going, this low right here. I like to see us come up probably a little bit further. I would like to see both of these highs being taken if we can come up here as well and take this high and then probably into this imbalance here. That's what I would like to see. But we'll see what happens in the overnight session. So right now, markets are setting up really nicely. We just swept New York PM high from on Friday. So we'll see if we have any more room to the upside, or we reject down right now and start to displace back inside this range. So waking up tomorrow, again, depending on what happens in the overnight session, let's say like this is the high that we put in now and we don't come up any higher. Let's say we just have this big sell-off. From here, I'll be looking to take some sort of fair value gap targeting sell side, because if I'm being honest, on Monday, we'll probably either have chop in the morning and then displace later, or we'll just have a fast run on whatever the draw is. So going into tomorrow, I'll be looking to take some sort of entry in the morning in this range to target that sell side level. So we'll see what happens in the overnight session. Any questions on that so far? Yeah. I will be trading live tomorrow morning. Any tech stock with bad earnings will help bear momentum bias. Yeah, it will. Also, another thing that's funding, that's adding more conviction onto this bearish bias is the dollar's very bullish. So the dollar's bullish, giving us better bias that NQ in the markets that we're trading want to be bearish. Looking at DXY, had big displacement up. We've swept this little low here. We have a daily fair value gap that just opened up. This could become where we want to sweep on DXY. I would want buy side to be here. Looking at this, could possibly either see one of two things. Zooming in even more, we could see us hold this order block and bounce back up higher, or we could come down to see us sweep this. So the two things that I'm watching here is either we hold here and then bounce back to the upside, or we continue a little bit lower, sweep this low, bounce off this imbalance, and then see higher once again. So this is what I'm expecting to see on DXY. Is to come in this 15-minute fair value gap overlapped with that daily fair value gap, sweep this little internal sell side level here, and then look to see higher. So this is what I'm looking for on DXY as well. So again, everything's lining up this week. Should be good. Again, just by looking at where we are in the markets, notice this week, going into this week versus going into last week, being able to understand what's most likely to give us good action, good opportunity, is recognizing when everything is in favor of, they're all correlating, right? DXY is bullish, looking like a really clean chart. We've swept sell side, big displacement up, draws looking higher, which is good, right? That also is in confluence with DXY or NQ being bearish, right? NQ and ES both being bearish, starting to form market maker sell model. Everything is in favor. NQ's looking really good. I think we're going to come up, reject this, probably even maybe come into this little breaker here that we have, and start to sell back off to the downside. So we're looking really good this week. I'm expecting to get some good action, and I'm expecting to get some good setups. So looking at ES, again, let me clear the chart here. Similar thing on ES, come back up. We've now rejected on this daily imbalance, as well as that previous daily or the weekly kind of breaker that we had here. We had this breaker here that we've now rejected off of. I'm looking to see this roll back over to the downside as well, and I think we probably have more downside to go on ES. So this is looking really good. I think we will see some good opportunities this week. Looking at the 4-hour as well, after rejecting off this imbalance, starting to see more downside as well. No inefficiency here like we do on NQ on a bigger time frame. If I zoom in, we probably have something. We have a 1-hour here. So again, would probably want to see us come back into here, reject off this, have this 15-minute high here that we could look to get swept. But NQ is what I'm going to be watching to really lead direction this week. Let's take a look at some other things as well. Let's take a look at CL. So that trade on CL on Friday played out really nicely. This was the trade that I took on Friday for CL. It originally got stopped out. I got stop hunted, and then I re-entered back into this, and then ended up both hitting my TPs. If we want to go over this just a little bit. When we came back down, big displacement up, market structure shift, expecting the draw liquidity to be this high. I was waiting to see some sort of sell side being swept. Looking at the 5-minute, we had this low. Sell side got swept here. Displacement back to the upside. Pull back to 5-minute fair value gap. Continue to hold it. I just put a little bit of a tight stop here. When I entered in this, I put it at the bottom of this low originally, and then ended up just tipping me out here. And then right when this ended up getting bought up, right back into this, I knew I probably got stop hunted again because we were holding the bigger time frame 5-minute fair value gap. So I entered back in and took off half at this high, and then I took off the last of my contracts at the external high there. So good trade on CL. So going into this week on CL, we'll see what the bias is looking like. Zooming out to the daily, is not looking too bad. Again, bigger time frame draw, I would like to see become this high. We'll see if we continue to have bullish momentum or not. This big candle that the downside could have some sort of structure shift to the downside. We are bouncing off of this weekly imbalance. But zooming in on the daily, I would like to see either us continue to run through this imbalance right here, or either come up, sweep this daily high like we just did now, and then start to roll back over, which then sell side would become here, and that internal sell side would become here. So the one thing I'm looking for is we have this daily order block here. If we zoom into the 4-hour, we have swept this 4-hour high here now. So if we do get displacement back down in this range, we could expect to see possibly lower prices back to rebalance here. So two things I'm watching for on CL would either be us come down, we continue to hold this little order block here, or we have displacement back down, we run this, and then we can look to see sell side. So zooming into a smaller time frame, again, would want to see displacement to the downside. This could actually be the start of the manipulation move if we look at it. So we'll see if we start to get more downside on CL or not. And could expect to see lower prices here. So let's take a look at Euro. Again, Euro, super bearish going into the week on Euro. Been wanting to take shorts on Euro. Haven't gotten an opportunity yet. Would look to see if we can get some sort of opportunity. Honestly, you could really short anywhere on Euro. The draw is super clear to me on Euro. I think we're going to sell off more. For me to get a valid entry, I would like to see some sort of either bigger time frame imbalance being rejected or some sort of high being swept. Don't know if we're going to have the move that I want, which is I want this 1-hour high to be swept and us to come back into this imbalance. It's absolutely possible. I really would like to see that happen. But we might just come up, reject, and then just continue to sell off to the downside. So any sort of trade that you could look to take on Euro, I would be waiting for. Number one, we have come up here, rejected off this order block here. So if we get, continue to displace to the downside and we get a market structure shift here, you could look to possibly take Euro shorts. So if we continue to get displacement through this high, you could look to take some shorts on Euro, which honestly I wouldn't be opposed to. So Euro, again, drawing liquidity going into the morning or going into this entire week is this daily low here. Looking really good. Again, came back up, rejected that 4-hour imbalance. We've swept this buy side. We have structure shift to the downside. Again, market maker sell model back to the downside now. So this is looking pretty good. So we'll see. And if we get any sort of opportunity this week with Euro. Anything else that you guys want me to? Let's check gold. Again, gold's starting to look really good. We've swept the sell side. Again, notice the big displacement we're starting to have back to the upside. Again, notice there's not really a lot of super clean structure yet for us to base a bias off of, even if it's internal, because we've just been kind of straight up. So again, this is when I would zoom out and really look for any sort of external imbalance. And notice we have big one right here. We're in a fair value gap right here. So a lot of the times I would be waiting for us to come down to some sort of imbalance. I really like more of this area here. And I'll probably zoom into a 1-hour or a 15-minute. Again, I like that we have this order block here. So this is where I'd kind of mark out for us to retrace back into, is right below here. So this is kind of where I'd want to see us reprice into on gold. But gold definitely looks like we want to retrace before having some more move to the upside. So I'm looking to see gold continue down a little bit more before having a big move back to the upside. Any questions? I will be going live on Wednesday as well. I'll be doing a YouTube live as well because we didn't do it last week, so I'll do on this week as well. Yeah, let's check news real quick. I checked news earlier, but let me double check. So Monday should be good. We have some red floor news that should give us some nice volatility in the morning that we don't really need to worry about pre-market. And then we have some FOMC member speaks later. Again, don't really worry about that if it's not Powell. Tuesday, we have actually I want to make it so I don't have to see this. Let me filter this out. Okay, there we go. All right. Tuesday, core retail, again, morning should be good. Wednesday, again, more member speaking, nothing really too big to worry about. Thursday, okay, so Thursday Powell speaks, so we'll probably. I mean, we might do it. We might trade on. Okay, so if we trade on Thursday, again, I'm gonna put this into your brain. Protect yourself. Be smart. If you go on Forex Factor and you're like looking at the days going into the week, let's talk about this. You guys should be setting a plan for yourself for every day going into the week. When we go on Sunday and we look at this news, I want you guys to go into your journal or whatever it is and say, all right, Monday, Tuesday, Wednesday, we're looking good. Thursday, keep in mind, Powell speaks. I should probably lower my size today, lower my size on Thursday if I'm going to trade, right? Even you might be best to take the day off, right? But if you are going to trade, lower your size and protect you because a lot of the losses and a lot of the profit that you guys are going to give back is very unavoidable or very avoidable losses, right? A lot of the losses that end up eating away at your growth in your account or growth in your funded, whatever it is unnecessary losses that can be easily avoidable if you just have the discipline to recognize what is favorable conditions and what's unfavorable conditions, right? So going into this week looks really good. Price action looks really good. Where markets are setting up, it looks like a clear draw, in my opinion, on NQ and ES. We have decent news. It should have a good, run. We should have nice volatility. We should have a good run. Just keep in mind Thursday we have Powell, right? So just lower your size, right? And then Friday, again, nothing really much to worry about. So we're looking good. Justin, can you check long on gold on Friday, 10 a.m., 5-minute fair value gap? I didn't take due to news. Yeah, let's take a look. 10 a.m. I'm guessing it was this, yeah. Yeah, it doesn't look bad. Again, this is a very, taking advantage of the trend, super strong trend. We're super bullish. Again, you got pretty much what you needed here. See that internal swept, zoom into a smaller time frame, you get big displacement to the upside. Again, this is the kind of thing where if you are taking advantage of a super strong trend here, this is everything you need to see for you to take a setup. You need some sort of internal being swept, and you need some sort of displacement with a bigger time frame imbalance, right? So that's what you get. You get this low, you get the stop rate, you get displacement, you get a structure shift, you get to just pull back into some sort of discounted PD array. Again, or you could look to take just the 5-minute and target whatever that recent high is and whatever your projections are. So yeah, that would have been a fine trade. That's why I wish I didn't trade last week. First couple days were good. Action was weird the whole time, though. Was up 4K on my PA. Now I'm at 1,500. Again, we talked about this in the charting session that I kind of went off. I think that was sometime last week where I made that video on. One of the things that we talked about was a lot of you guys will get upset with taking losses because you end up losing confidence with something, not realizing that you're trading either, number one, incorrectly or bad market conditions when you shouldn't be trading. And then when the time comes where there are good conditions and there are good setups, you've lost confidence and lost the edge in you to be able to take those good setups because, again, that's you can't let 1 week, you can't let 1 day of bad trading affect you from progressing in the future, right? A lot of you guys, if you had like a bad week this last week or the week before, whenever it is, if you had a bad week and you go into the next week with that same idea stuck in your head saying, oh, I was bad, down back this week, or I need to make this money back, whatever it is, my eval. You have to go into it recognizing the only way you're going to either be successful or unsuccessful is what the market gives you. If you try to make opportunity that's not there, which is not high quality opportunity that the market's not giving you, and you just want to force trades, you're going to get bad results, right? It's just simple. If you wait for good market conditions and you wait for a clear understanding, everything's on the same page, right? Like this week, for example, I think just by looking at the market, again, I'm not a fortune teller, but just by looking at the charts on Sunday with you guys, looking at getting ready for the week, market looks a lot better going into this week than it did last week. Just by recognizing the charts and what the overall draw is, because everything is in favor of one another, right? Everything is in the same direction. Going into last week, everything had no correlation whatsoever. DXY had no correlation, NQ had no correlation, ES had no correlation, right? It was during the day, 2 different runs, 2 different draws. Going into this week, all charts are aligned right now, which looks good, which gives us good action. When everything's aligned, you'll get good action, and you'll get efficient price action. Any other questions, guys? When should you know if you should put a tight stop loss? It depends on the model. A lot of the times, I'll put a tight stop, like the times where I'll put a tight versus a loose stop loss. Again, it all depends on whatever model I'm trading, because a tight versus a loose stop loss is all fractal, right? It'll be different whatever the model I'm trading, because if I'm trading a short model on like a 15-minute, my stop is going to be a more points wise, right? More points wise, which means I'll lower my size to whatever the loss is, right? But if I'm in a smaller time frame and I'm trading the exact same model, the same structure, it's going to be smaller point value, but it's still going to be around what the chart is telling me my stop should be. So a lot of the times, if you are trading a bigger time frame, for example, if I'm trading a internal model, right? Like if I'm using Confluence from, let's say this is a 30-minute or a 1-hour fair value gap, and we have strong momentum, and we get something like this, right? Or whatever, something like this, right? And I'm looking at this on a 1 hour or a 15-minute, and I'm looking in and I see a 5-minute fair value gap, right? So there's 2 ways I can trade this, right? Number one, obviously you could just take the long here, right? Enter the fair value gap and look to see higher, right? Don't zoom in, don't get, swayed on whatever the internal, structure is looking at. You don't need to zoom into a 1 minute. Just take what the 5 minutes looking at you and put your stop. First BT would be here, whatever, right? And then put your stop at whatever the, the recent little leg is, or whatever the bottom of the fair value gap is, right? In this case, put it at whatever the bottom of the candle is, right? Whatever the bottom of the fair value gap candle is, or put it at the most recent low if you want to be sure. Or you can zoom into the 1 minute and wait for displacement even more. So there's 2 ways, right? Which one is better? Doesn't really matter. I wouldn't say one is better than the other, but one is more likely for you to get stopped and one is less likely for you to get stopped, but one is more likely for you to have worse RR and one is more likely for you to have better RR, right? Which would be waiting for this. If I was going to zoom into a 1 minute and I was going to be like, all right, 1 minute's coming down, 1 minute's coming down, still not ready, still not ready, still not ready. Boom. Then we have that candle to the upside where it's, displacing, respecting after we've now accumulated on a smaller time frame. Then I look to enter, and then what I'll do is I'll put my stop at whatever the recent low is, right? So then I get really good risk to reward or whatever it is, right? And I get a lot better risk. Now, both of these setups are exactly the same exact setup, right? You're trading the exact same model and the same bias. It's just different entry. It's just different entry models, right? One gives you better risk. The other one doesn't give you better risk, but one is more likely to get stopped. The other one's less likely to get stopped. So it all just comes down to personal preference and all with whatever you have conviction for. Now, I recommend doing this model besides not the internal model, but the 5 minute. If you have more experience, like I normally will take the 1 minute entry just because I like to have better risk, and a lot of times when I win, it'll wipe out all my losses just because I can have good risk. But I don't. A lot of times, if you don't be ready for this, because a lot of the times when you trade the internal model, you'll get stopped out, or you don't know when to re-enter, or you'll end up not knowing. You'll get too swayed by the internal action. You're gonna think that it's going against you when it's not, and you're not focused on. You're just too zoomed in, right? You're just too zoomed in. You're overanalyzing. So there's two ways of doing it. You can picture which one works for you. Again, continuing to backtest, continuing to just watch the market. Either stay out of the lower time frames or zoom in to find sniper entries. But again, having sniper entries just takes time and experience. And you need to see exactly what you just need to know what you're looking for. That too, exactly. Helps to scale in. That's another way you could do it as well. Enter half your position on the initial move. Put your stop loss at the low, right? What you can do is enter half your position here. Enter your stop loss here. Once you get this move up, trail your stop loss to the bottom, right? Your fill will get better, and you have good RR, right? There's completely different ways to manage a position, right? But notice all of those entry models are completely different, but you're trading the exact same model, right? The exact same bias. So it's just finding what works for you, right? There's scalpers. I know people that will basically just enter here and then take off, all profits here, just because that's what they're confident in, that's what they're good at, right? They'll just scalp this little move here, right? It all just depends on what you're comfortable with, right? Like there's people that will literally just right when a fair value gap gets ran through, they'll automatically enter a position and just target whatever the internal draw is, right? Like that's what Dodgy does, what Ryan does, which I don't feel like I could never trade like that just because the risk is awful. Like he just trades inverses. Like if there's a fair value gap here, right when this literally gets through it, he doesn't really wait for a close. Right when this gets through it, he'll automatically enter long, like right here, but with terrible risk, and he's just targeting here. Now, it's a high percentage that it'll work, but the risk is awful. That's why I would never trade like that. But again, there's all different ways for you to, again, that's why trading is, you can't copy somebody else to a T. You can, but all the people in this community and this Discord that have learned from me, I guarantee you most of the people that have become successful have used what I've taught them, and they've formed their own confident models that they trade. And that's the whole point of ICT concepts, is for you to use all of these models and draw on liquidity, fair value gaps, market maker, sell, market maker, bottom, all of these things for you to form the best way that you trade, because we're all different, right? Everybody has different risk parameters. People like to trade smaller time frames. People like to take bigger time frames. It's all different to who you are. So it just takes time to figure out what works for you. How do you determine discount or premium of a range? Or if there are multiple highs and a low in a certain range, how do you know what high or low to use? Again, it's all fractal. It's all fractal. It doesn't matter. Like if I'm looking at this range, right? If I'm looking at, like, again, if I'm on a 4 hour, right? If I zoom out and I'm looking at, well, it's not in this really case because it's a sell model, but like, let's say I'm in a buy model here and I think this is a pullback to go higher. This is the entire range, right? So discount premium, this is equilibrium of this entire range, right? But if I zoom in and I'm like, hey, I want to see us go back to equilibrium of this range that we have here, right? Now this could be, again, it's all just context. It's all structure. It's hard to explain it because you have to have structural context. Without context, you're trading technical analysis, right? Let me say that again too. ICT concepts is not some magical thing that you'll instantly be profitable with. If you are just trading ICT concepts like buy side swept, market structure, or like sell side, buy side, fair value gaps without any context to it, then it doesn't work. It doesn't work. You have to have some sort of context with it. And again, what I mean by that, it might sound like very vague, but you'll have to understand over time. And if you don't understand right now, watch all of ICT. Watch 2022 mentorship. Take notes with it. Watch it again. Take even more notes. And then go watch other stuff. But you have to understand what that means when I say without context, you're just drawing lines on a chart. How many cons should I use in a full-size trade for a 50K funded? I'm on MES and MNQ. If you're trading micros and you're what is 50K drawdown 3,000? Your max risk if you're trading a $3,000 account or 2K, your max risk should be like $300. Market experience is the most important factor in becoming profitable, in my opinion. I agree. 100% agree. How do I draw the curve on my chart? You just go to drawings and you have arc or curve, whichever one. You can just draw this in and draw it however you want. All right, guys. Any last questions for tonight? It's pretty much all I have for you guys for tonight. I'm excited to get the week started. Of course, guys. Much love. Thank you guys for coming out tonight. Hopefully, you guys got something from this. I'm excited to get the week started. For the people who came in late, I am bearish going into the week. I will be trading tomorrow morning on Monday, so I will see you guys then. All right, guys, enjoy the rest of your night. If you have any further questions, feel free to just at me in the Discord or send it in the questions channel, and I'll make sure to help you guys out. So enjoy the rest of your night, guys. I will see you all tomorrow morning. Peace.